Hi guys, welcome back to our Philip Trading Podcast. I'm your host for today. My name is Aiman and I'm a dealer here at Philip Capital. Now, before we start, please take note that this presentation has not been reviewed by Security Commission Malaysia and it's for general education purposes only. It is not an invitation to buy or sell any products. Hence, the speaker and Philip Capital are not liable for any financial decision that you may make are based on the content of this presentation. And with us today is an extremely experienced speaker, Mr. David Lowe. Welcome to our podcast today. How are you today, David?
Excellent, Nyman. Feeling very, very good and excited.
All right, nice. So now, before we start, let me just bring you through a quick introduction to our esteemed speaker for today, Mr. David Lowe. Mr. David is the managing partner of X Models and Trading Group, a training and consultancy firm that offer bespoke financial market education and service to both individual and corporate clients. David has over 25 years of experience in the listed derivative industry and has held leadership position in futures broking division of major investment bank in Malaysia. And fun fact, David was the past president of Malaysia Futures Broker Association from 2018 to 2019. Yeah, what an interesting speaker we have today. Well, I won't hold too much of your time. Let's get straight into the content. On to you, David.
Thank you, Ayman. And in this podcast, we are going to talk about this very important. And I think this question has been a lot in the mind of a lot of gold investors and traders, right? What gold is going to do after the January crash? Okay, so then can that bull run recover from that crash? So I think this podcast will give you a bit of insight. Of course, that topic we will have a full webinar, okay, on the 26th of February, where we cover extensively on this title. Okay, gold after January crash, can the bull run recover? Okay, so today will be kind of like a quick intro into that subject, and then we'll delve into that matter in more detail on the 26th of February. Right. Before that, let me quickly share my slide. Okay. I'm going to send a request. So Iman to give me the sharing. That'll be shortly. Okay. 1 second. Okay. All right. I hope you can see my slide right over here.
Yes, I can see clearly.
All right. In the same theme as our main webinar, this is likely what you call that the theme in every gold trader's mind now. Okay. So what has happened is after the January crash, with really actually accelerated in January the 30th and the next trading day in February, gold has actually recovered. Okay, gold has recovered, the trading now about 5,000 US dollars per ounce. Okay, so the question is now is, are we back in the game, right? Are we back in the game? Is it now let's get back in and ride the bull again? Okay, so I think things are of course not so straightforward. Okay, although it's very, very tempting now to see go back up near the 5,000 levels, and we'll have a look at those factors which actually cause what has happened in the last 45 days, right? So let me share you this slide. Okay, before we get into looking at the drivers of that bull run, this is the what do you call that review of 2025. So if you see how gold has actually come in terms of the returns, okay, gold and silver, these two precious metals. So 2025 was really the year where the precious metals had a fantastic and dazzling performance, right? And this particular chart here, right here, you can see the difference between precious metals, and also you see the measurement against the S&P 500 index, which for the year was up about 17+%, which is actually very good in terms of the equity markets. But gold was actually doing very, very well, in the sense that you could see what do you call that? Gold was up 85%, above 85%. Of course, silver has been amazing. Those of you who have been following silver as well, okay, I hopefully that you took some great profits. In 2025 was up 200 over percent, right? Amazing performance. And of course, you had those people in 2025, which was very, very excited about Bitcoin as well, right? But Bitcoin actually ended the year on the negative side. Okay, so in terms of asset classes, precious metals were really the performer for last year. Okay, and coming into this year, right? If you look at the weeks leading up to January 30th, okay, you could see this couple of weeks and right up to the peak, okay, on January 29th. Okay, you can see that the key drivers of this particular move has been a couple, but five of the main drivers actually, okay, drove market prices. Okay, and the first is we need to know these drivers because we must see whether if the trend is going to continue, whether these key drivers in 2025 is continuing going to be playing its part in 2026. All right, so these are the things that we will need to be looking at if we are watching gold. All right, the first thing is central bank demand. Okay, one of the key primary drivers in 2025, and this is a very structural shift in terms of the central banks around the world. Central banks have been buying gold for their reserves, okay? And one of the main motivations of central bank doing that is basically the concept of de-dollarization, basically diversifying away from the US dollar, okay? So there's some nervousness in terms of how the US dollar is going or how the US is doing. So some of these central banks, okay, are actually now using gold or increasingly using gold as part of their reserves. Okay, so in 2025, large buyers like China, like the Indian Central Bank, and also Poland has been increasing their reserve in terms of gold in their bank vaults. Right, so this is one of the main things that has driven the gold prices. In terms of central bank demand, actually, it takes up about 25 to 30% of the world's gold production in a year. So this is a big factor. Okay, so if the central banks are continuing to be aggressively moving away from the dollar and into something like gold in terms of their reserves, then this main thing will continue to be one of the big factors. Okay, of course, not only in terms of the dollarization. Okay, gold has been traditionally and hedge against inflation. Okay, so if there's some debasement in fiat currencies, a lot of people actually want to go into gold as an inflation hedge. Right, now the second one is investment demand. Okay, the retail investment demand. In terms of gold ETFs and also physical gold itself, bars and coins has increased tremendously in 2025. Okay, so this is one key thing that you want to look into as one of the factors as well. Okay, so because of the good performance, right? Of course, people continue to rush. Wow, gold is really going up, so everybody's going in buying ETFs, buying physical gold bars and coins. And I feel that even today, just now I had a conversation with a couple of friends. They're still looking and talking about gold. Okay, up to this particular time. So the retail and the investor on the road, okay, looking at investment demand is one of the big factors as well. Now, the other factors that drove prices up, of course, the Federal Reserve rate cuts, right? Something that they've been cutting rates. So in terms of gold, that will be beneficial to gold because gold prices are inverse to interest rates. So if interest rates were to go down, then it'll be beneficial to gold. Right, now, one of the other very important thing about gold is in terms of hedge against geopolitical tensions. Gold performs very well in terms of when the world is very uncertain, okay, in terms of geopolitics, right? Like last year, you had the President Trump using the tariffs, okay, to fight an economic war, okay, called, of course, now they call it the trade wars, right? And you have the Middle East conflict, okay, in Gaza, in Iran, okay, in other parts of the world. Also, you have the European security concerns. Now, all these geopolitical tensions, okay, will drive gold prices upwards because people are not certain. They find that the future is very uncertain and very risky. Okay, and the very natural thing is people will go in and hedge using gold. And a study has shown that throughout history, gold has been a very reliable, what do you call that, hedge in terms of geopolitical risk. Okay, and lastly, of course, the US dollar weakness. Okay, we've seen US dollar. Of course, when US dollar is down, gold prices tend to go up. So this has been the key bullish drivers in terms of this huge run up until the January the 29th. Now, what caused the whole thing to unwind in the next 3 days after January 29? Okay, January 29 was the peak. Okay, gold reached to $5,600 per ounce and dropped down to a low. Okay, in the next 2 days to 4,450 price levels. Okay, so what actually happened, right? So some of the people have been struggling with it. Okay, so one of the most quoted reasons is the nomination of the Trump's nomination for the new Fed chair, Kevin Walsh. Okay, as the Fed chair. Okay, so everybody's saying that during a time President Trump was really basically looking for a person that can cut rates of him, right? He was saying that Powell is not really doing his job in terms of cutting rates. So everybody was thinking the guy that he would nominate, okay, will be very dovish in the sense of the interest rates, right? But he nominated Kevin Walsh, who was known to be a hawk. Okay, that means Kevin Walsh has more inclination in terms of his previous performance of his previous attitudes, okay, to be someone who would prefer, rates to be higher. So that really basically took the market by surprise, right? Because higher interest rates means, it's bad for gold, right? So I think that particular nomination actually triggered something, right? So the market started to drop, and then you will have this huge speculative bubble. I think what has happened in the first few weeks leading up in January was this huge parabolic move, right? Of course, things were coming to a point. You had Iran, you had everything coming to a point and moving up in a very parabolic way, the price, okay? And in terms of what we technical analysts will say, that if you have a parabolic move, okay, you will tend to have a very big fall, okay? So anything that triggers it, okay, and this particular news was something that people blame it on that fall, right? They had really nothing to say why it actually drove the prices down. Okay, but this particular trigger basically started the whole stampede. Okay, so as prices continue to go down, now all those people who were in the money started to take profit. So there was a profit take stampede. Okay, so this particular parabolic move usually ends up that way. Okay, so now the question is this. Okay, after it has fallen to a low of about 4,450, now has rebounded back to the 5,000 level. Okay, so is this the start of the new record? Are you going to take this ship upwards? Okay, or is it there's still somewhere down there the sharks are? That's why there's a shark there. Okay, this is the question that we really want to answer on February 26th. We will go really in depth. And then I wanted to hint you on, because market psychology is very, very important, okay? And understand the current market psychology, or which phase of the market psychology gold prices are currently at, is very, very important, okay? Of course, in today's short podcast, we can't cover that, but in on the main event on the 26th, we will cover in depth what phase is the market currently. Is it time to buy, or is this a bull trap? Okay, very importantly, are you going to buy at current moments and see the market crash? Okay, so this is very, very important. So this is something I want to talk about. Okay, but remember these bullish drivers. So if the market is going to continue to be able to recover, then all these what do you call that, 5 bullish factors we want to keep in mind. All right. And then, of course, you have the gentleman who is the US President, Mr. Donald Trump. He's going to play a very, very big role in the next 3 to 6 months. All right. You can be assured of one thing. Okay. There'll be a lot of uncertainty. There'll be a lot of volatility, and it's going to persist not only for the next 6 months, I think for the next couple of years where Trump is continuing to be the president. Okay. But those factors that he's going to impact is this, of course, geopolitics. Okay. Whether he's his efforts to promote peace, okay, with those warring parties or those conflicts that he himself is going into in terms like Iran. It is going to happen, okay. All these things plays into gold. Okay, as we said just now, geopolitics is a big impact. Okay, then what about inflation? Okay, what about his trade war, his tariffs that he puts on everyone? Okay, tariffs are very inflationary in a sense. Okay, although in terms of the U.S. inflation, it's not really sinking in yet. Okay, but tariffs are traditionally inflationary. So inflation, gold is good inflation. So that's another factor that's very supportive of gold prices. Okay. Now, what about the US dollar and interest rates? Okay. So with his new nominee, and if it gets passed by the Senate and gets approved, and then Kevin Walsh becomes the new Fed chair, what's going to happen to interest rates? Okay, within this 3 to 6 months, because the new chairman is coming in May, right? The new Fed chairman. Okay, and what about the economy? How is the US doing? Now, all these things will be impacted by Trump's policies. Okay, so this is the man to watch in the next 1 to 2 years. Okay, very, very important man to watch. And we will talk about some of his policies in the coming webinar. Okay, so I'd like to ask you to mark this date, okay, 26th of February, okay, 8 p.m. Okay, and we'll continue our discussion and conversation on gold after the crash and can this pool really recover? Okay, we will cover, just now we did what happened, okay, a recap and a review of the current volatility. And what are the key factors, okay, going forward? Okay, so we saw what has happened in 2025 and the first few weeks of 2026. Okay, what's coming, and more importantly, how do you position yourself for the opportunities, okay, with products like gold futures? Yeah. I pass the conversation back to Ayman.
All right. Wow, that was such an insightful session. Thank you, Mr. David, for the gold insight. For those who are interested to know more, as mentioned by Mr. David, you can join the full-length live webinar on the same topic on next Thursday, this Thursday, to 26th February from 8 p.m. to 9 p.m. Also, you can utilize the insight shared by Mr. David Low by gaining exposure to the CME market with Philip Capital as low as 4 USD. For more information, you can visit our website at philip.com.my. Thank you, Mr. David, for your time, and thank you all for tuning in.
Pleasure, and see you all on 26th of February. See you, Ayman.
All right.